Hello, my name is Mark Roberts, and I'm the Chief Financial Officer for the City of Pitt Meadows. This presentation will provide you with a brief overview of the process the City follows to determine the amount of tax we collect from each property owner. The best way to describe the tax calculation process is to demonstrate it by way of a formula. So with this in mind, there are three factors needed before the tax allocation per household can be calculated. The first factor is variable A, the tax revenue needed to balance the budget to zero in order to fund the services set by council. The second factor is variable B, the total assessed values of all properties, which is provided by BC Assessment Authority. For information, the City receives the assessed value information a few times throughout the budget process. However, the final values are not available until the revised roll is received in early April, at which time the final tax calculation can be completed. Until then, the assessed values are preliminary and subject to change. The third variable is variable C, the mill rate. The mill rate is calculated by financial services staff and represents the tax rate for every 1,000 of assessed value. The mill rate is simply a factor that is derived from both the assessed value and the tax revenue to determine how much tax to collect from taxpayers. As long as we have two of the three variables, the third variable can be calculated. In this situation, we wish to calculate the mill rate so that the taxpayer can be appropriately taxed and the approved revenue by council is properly collected. At the bottom of the slide, we will write the actual formula that determines the mill rate. Variable A, or the tax revenue we need to collect, divided by variable B, or the assessed value for every 1,000 that has been provided to the City from BC Assessment, equals variable C, or the mill rate. There's often a misinterpretation that increased assessed values translates into revenue windfalls for municipalities. This is not true. Council determines the amount of tax revenue needed to deliver the services, and once this happens, variable A, the tax revenue, becomes fixed. If there's a market change and the assessed values rise from one year to another, the mill rate is then subsequently reduced. This adjustment to the mill rate ensures that the City does not receive increased tax revenue simply because the assessed value or market value of properties rise. After the mill rate has been adjusted to accommodate market value changes, the mill rate is then increased to reflect the council-approved tax increase being added. So mill rates are purely a mechanism within a tax calculation formula to collect taxes needed to balance the budget. As you can see, the City has 7 different property tax classes as listed down the left side of the table. Each property class has its own mill rate that is derived from assessed values and tax revenues that are specific to each class. Essentially, the mill rate calculation process that was described on the previous slides is performed for each of the 7 property tax classes. Using the City's 2014 tax revenue, this table provides a snapshot of how the City's revenue is shared amongst the different property tax classes. So it's no surprise that the residential tax class provides the largest contribution of taxes. Of the $16.2 million of taxes collected, residential contributes over $10 million of the total taxes collected. Business, the next biggest contributor, provides $4.3 million of all tax classes. It is important to note that the City has a tax and revenue policy that sets out the objectives regarding the distribution of property taxes among the property classes. Through this policy, Council is permitted to shift taxes between classes to lessen the tax burden on any one particular class. This chart graphically depicts the percentage of taxes collected from each of the property classes. As shown in the orange segment of the pie chart, the residential contribution to taxes is a significant portion of taxes collected at 62% of the total. Business contributes nearly 27% of the taxes collected. Here's one example that shows the top portion of a Pitt Meadows 2014 property tax notice. This tax notice represents an actual existing single-family property whose assessed value of $458,000 matches the average of all single-family properties in the City. All personal details have been removed for privacy purposes. The important message here is that many of the charges shown in the tax bill have absolutely nothing to do with the City. The city merely collects the charges and remits them to the various outside agencies, including school taxes for the province, the GVRD, Municipal Finance Authority, BC Assessment, and TransLink. The fees and taxes collected for city services are shown within the outlined areas. The remainder of charges relate to other agencies. So using this bill as an example, we can calculate that the city charges amounts to $2,848 only of the $3,997 total amount that is shown at the bottom of the bill, which is before the homeowner grant deduction. This amount represents 71% of the bill. The remaining 29% relates to other outside agencies which the city has no control over. This chart graphically depicts the amount of an average single-family home's tax bill that goes towards three categories: municipal taxes, municipal utilities, and external agencies. The inner circle of the pie shows the amounts that go to each of those three categories, and the outer circle shows in more detail which areas the tax payment goes to. The green section of the pie chart reflects municipal taxes that are collected. The red section reflects municipal utilities that are collected, and the blue section indicates that 29% of the taxes paid by the owner of the average single-family home is levied by external agencies. The city simply collects these funds from Pitt Meadows taxpayers and remits the same funds to the external agencies. So, when a taxpayer looks at their bill, the zero increase that Council has set for 2015 applies to the city charges only. Therefore, it's quite possible that your bill will go up because the external agencies have increased their charges, which once again the city has no control over. Next, we thought we'd touch on a couple of budget concepts and principles, so we have dedicated a few slides to this topic. First, a quick comparison of what constitutes an operating cost versus a capital cost as they relate to taxation might be helpful. With respect to operating costs, they have a direct and ongoing tax impact and reflect the day-to-day business of running the city. Typical operating costs are shown on the slide, including wages, supplies, heat, and light. Operating costs are direct because when they change, the tax increase that year will have an exact corresponding change. Once that tax rate has been changed in any given year, to accommodate the operating cost change, the taxes collected each year thereafter will be sufficient to pay for the operating expenses on an ongoing basis and in perpetuity. You'll notice within the two green bubbles to the right of the slide, there are a couple of important facts. First, for every 1% tax increase, $167,000 of tax revenue is generated. This means if operating costs increase by $167,000, a 1% tax increase would be needed to balance the budget to zero. Second, the city's operating budget for 2015 is $31 million, which includes all city departments, all utilities, and all capital reserve contributions. On the other hand, capital costs are costs to maintain or replace the city's assets like infrastructure, amenities, equipment, and buildings. Costs associated with a capital project have an indirect tax impact, assuming they are funded by city reserves and not funded by external funding sources. What I mean by this is, simply removing a capital project cost from the budget does not extrapolate into a tax decrease. However, it will create savings within a reserve. In order for a tax decrease to result, the annual reserve contribution that is funded by taxation must be reduced. In turn, the magnitude of the reserve contribution reduction will dictate how many projects from each year of the plan will need to be either eliminated, deferred, or the scope reduced to meet the lower year-over-year reserve funding. So what capital project funding sources do affect taxes? A reduction or an increase to annual reserve contributions that are funded by taxes, like annual contributions to the life cycle, equipment replacement, transportation, or building replacement reserves will affect taxes. And a project funded by debt, which has debt servicing costs in the form of interest and principal that needs to be paid from taxation each year, will also impact taxes. As well, often there are capital projects that involve funding sources that don't affect taxation, like road use levies, which the city collects from businesses in the community that utilize trucks with heavy loads. The heavy loads cause higher wear and tear on the city's road infrastructure for major truck routes, thereby justifying a levy to these companies. or development cost charges, which the city collects from developers in recognition of increased demand the additional population places on city services, or grants from senior governments and outside agencies such as ICBC. In addition to operating capital project costs are reserve contributions that receive annual funding of $6 million. Reserves are beneficial in many ways. They avoid incurring excessive maintenance costs by providing funding at the optimum time to replace the asset. And they avoid debt and the associated interest costs related to borrowing, which can be significant. Although current interest costs are low, none of us can reasonably predict interest rates 5 years from now. If the city hasn't been saving funds in the reserves over that time, it could face significant borrowing costs that are not favorable to the taxpayers. Reserves avoid this problem. The city's operating reserve is beneficial too. It enables the city to manage one-time costs without a direct tax impact. Examples when the operating reserve can be utilized are managing high snow removal costs in a year with high inclement weather, or successful tax assessment appeals that require reimbursement by the city to a property owner, or unexpected emergency events which can cause significant costs to the city are able to be funded from reserves without creating ongoing tax impacts. Unlike capital reserves, the operating reserve is unique in that it is not funded by annual contributions from taxation. Instead, after all the operating revenue is collected and the expenses are paid in the year, a surplus when compared to the budget is generated, which is deposited into the operating reserve. Therefore, the balance in the operating reserve represents the accumulation of operating surpluses that has been generated each year. Although surplus is funded by tax, the amounts are not planned and are not predictable. They result from the actual activity in the year differing from the budgeted activity. This pie chart depicts where the city obtains its money to pay for its expenses. As you can see, we receive our revenue mostly from taxes at 75% of budgeted revenue and 21% from fees and charges. As you are aware, Council and staff have undertaken a rigorous process to develop the 2015 budget over the past number of months for both property taxation and utility fees. So in this presentation, we have compiled a few slides that summarize the 2015 tax and utility budgets as of today. This slide summarizes the tax impact of the average assessed single-family home of $458,000. City departments require $46,200 in additional tax revenue, which equates to $5 to the average assessed single-family home, or 0.28% tax increase. Our service delivery partners requested $213,700, amounting to $22 to the average assessed single-family home, or a 1.26% tax increase. Corporate finance, which houses budgets that do not pertain to any one specific department and primarily relate to taxation for new construction and reserve contributions, has provided net savings or tax reduction of $259,900. This reduction provides a credit to the average assessed single-family home of $27, or a 1.54% property tax reduction. And as you can see from the bottom of the slide, all these budget amounts adds up to a zero property tax increase. This means the city will not be collecting any more tax revenue from existing single-family homeowners in 2015 than it did in 2014. I would like to pause here for a moment though. It is important to mention and for you to understand that this does not necessarily mean that a single-family homeowner will see a zero change when they compare their 2015 bill with their 2014 bill. There are two reasons why this will not be the case. The reasons are, first, the zero tax increase, like any tax increase, is based on the average assessed single-family home. If the 2015 assessed value of a specific property changes more than the average assessed value change for all single-family homes in the community, then that property owner will pay more than a zero increase. And the opposite is true as well. If the 2015 assessed value of a specific property changes less than the average assessed value change for all single-family homes in the community, then that property owner will pay less than a zero increase. So for example, if the average assessed value change for all single-family homes in the community for 2015 is a $100,000 increase, and the 2015 assessed value of a specific property increase was only $80,000, this property owner will pay less than a zero increase. Second, it was mentioned earlier in the presentation that 29%, or nearly a third of the tax bill for the average assessed single-family home, raised to external agencies. Since the city has no control over these costs, it is quite possible that these agencies will have increases that are reflected on the taxpayer's bill. As you can see from this slide, the overall utility increase is also zero, leaving the total utility charge unchanged from 2014 at $1,075, with water services, diking, and solid waste services individually being held to a zero increase. However, storm drainage services have increased by a total of $8, $3 through the fee and $5 via the mill rate. The primary reason for this increase is due to the capital reserve increase of $80,000. That brings the total annual capital reserve contribution to $580,000. This is an important increase that is needed to mitigate the drainage asset funding shortfall. Offsetting the storm drainage increase is a reduction of $8 to the sewer services that can be attributed primarily to new growth and reduced budgets for lift station and line maintenance to match 3-year average actual costs. This slide provides you with the combined 2015 tax and utilities for the average assessed single-family home, as well as the amount that is included in your tax bill for each business unit or department, as shown on the left of the table. The bottom line for an average assessed single-family home for all municipal property charges, including utilities, is proposed to be $2,848 in 2015, a zero increase over 2014. So visually, this is how the combined increase looks for an average assessed single-family home. Last year, the combined 2014 property tax and utility charge was $2,848. Deducted from this amount is corporate finance, which provides additional revenue in the forms of taxation for new construction and enhanced revenues. Then we add the recommended changes to the operating reserve, the capital reserves, and the amount of the newly established building replacement reserve. City departments are added next, followed by our service delivery partners. And once we add the utilities, which offset to zero, we come to the total combined taxes and utilities for an average assessed single-family home at $2,848, which, as you can see, is the same as 2014. This pie chart demonstrates how the money is spent. Cities are service providers, part of the service industry. In that vein, a significant cost are the people costs that deliver the service, 19% to pay them, 2% to equip and train them. Capital reserves account for 21% of the expenses, and our service delivery partners, police, parks and leisure, and library, make up the bulk of the costs at 35%, or over a third of the budget expenses. In terms of service value, the cost of the city's services seem reasonable when compared to a few other basic household costs. This slide shows, as indicated by the gray bars, all the services the city provides, including utilities, for a total cost in 2014 and 2015 of $2,848 for the average household. This slide demonstrates the value the city provides relative to other household service providers, with the average natural gas and electricity bill of $2,250 alone, costing nearly as much as all city services combined. The numbers are based on a 2015 average assessed single-family home of $458,000. Breaking it down to a daily figure, the municipality provides these services at a cost of $7.80 per day to the average folio. The other thing I'm drawn to on this chart is the water number of $438, which extrapolates to $1.20 per day. It is the one thing that is used every day for drinking, cooking, cleaning, bathing, and toilet flushing. You can't even buy a bottle of water for $1. Plus, water is necessary for life, yet many people pay in excess of 3 times this amount for cable, internet, and cell phone. Since 2015 stats are not yet available, this table presents 2014 information. For your information, this data was produced by the City of Surrey based on each municipality's submission to the province. So how did Pitt Meadows compare regionally in 2014? This slide compares the total cost of all services to the average household in the region by city. This comparison approach is widely accepted by the regional municipalities and their chief financial officers as the best method for tax comparisons. As you can see in the green line, Pitt Meadows shows very favorable to other municipalities. In fact, it is the third lowest in Metro Vancouver. However, when we look at this slide, we need to be mindful that although the slide compares dollar costs, it does not compare service levels. Anytime you compare costs, you need to also compare what is provided. For example, Maple Ridge's costs do not include garbage pickup. Residents contract this on their own or drop it off individually at transfer stations. Maple Ridge's lower service level for garbage pickup causes their total charges to be lower than what would otherwise be the case. Finally, given that Council has approved a zero property tax and utility increase for 2015, we can be reasonably assured Pitt Meadows' comparative position with other Metro Vancouver municipalities will remain similar to 2014. The next slide is intended to give you an idea how the 4 years beyond the 2015 budget are planned. Previously, we have discussed the 2015 budget year. This slide provides a summary for the future 4 years of 2016 to 2019. On the slide, we have shown the aggregate revenue, city department expenses, expenses for the service delivery partners, and the reserve provisions. Also at the bottom of the slide, we have provided the proposed tax increase for the future 4 years that represents our best estimates to provide service continuity. From a high-level point of view, the significant budget drivers are, first, reducing taxation the city will receive from new construction over the years, which has the effect of increased property taxes to others in the community. However, it is difficult to accurately predict development activity, so taxation from new construction will change and is conservatively budgeted. Second, increasing reserve provisions to provide for the maintenance and replacement of the city's assets. Third, completing the 3-year phase-in from taxation for the business analyst position in the IT department for the remaining 2 years in 2016 and 2017. And fourth, increasing the city's complement for police members at 1 per year for years 2017, 2018, and 2019. The cost of each police member for salary, equipment, and vehicle is approximately $140,000, or nearly a 1% tax increase for each year. Adding 3 new members over the course of this 5-year plan will bring the total number of members in Pitt Meadows to 25. So this concludes my presentation with respect to the tax calculation process, as well as to provide you some information with respect to the 2015 budget as it stands today. Thank you.